I think the single most important thing to understand about Bitcoin is the first decentralized, truly digital property in the history of the human race. There is no property invented in the history of mankind that is better than Bitcoin. It's like fire or electricity.
Welcome to another deep dive. Today we're plunging into, well, a really big question. It's something Saylor, who's a major voice in the Bitcoin world, asks a lot. What actually happens when, say, half of everything important, everything valuable on Earth, just becomes software?
It's a huge concept, yeah. Really makes you think.
It does. And it perfectly sets up our topic. We're going to unpack Saylor's really fascinating take on Bitcoin. We're pulling insights from this massive long discussion on YouTube. It's called Saylor Flow, 10 hours of relaxing Michael Saylor speaking about Bitcoin.
10 hours.
Yeah, quite a source.
Mhm.
So our mission for you today is simple. Cut through all the noise, understand the core ideas he's presenting about what Bitcoin is, why it's strategically important, and what its future might look like. And we'll try to break it down, in simple terms.
And what's really interesting about using this source, this 10-hour talk, is that it's not your usual quick soundbite or like a news flash.
Right.
It's this very relaxed, almost meandering long conversation. And that lets Saylor really explore the fundamental ideas much more deeply instead of just reacting to, the latest price jump or some headline. And you'll hear it. He has this incredibly strong conviction. His claims are often really provocative, quite absolute, about Bitcoin's role and where it's headed.
Yeah, he doesn't hold back.
Not at all. So what we'll do is distill the key takeaways from all that material, give you a kind of concise but hopefully comprehensive view of his unique perspective. It's definitely a perspective that gets people talking.
Okay, let's dive in then.
Yeah.
Saylor doesn't just call Bitcoin another crypto. He calls it the apex property of the human race.
Yeah.
I mean, wow.
That's a big statement.
It is. So for someone maybe struggling with how something purely digital can be property, how does he make that leap? He uses this analogy, Cyber Manhattan. What's that about? How does comparing Bitcoin to prime New York real estate help explain its value?
Right. Okay. So the core idea, the really profound thing is getting at, is that Bitcoin is, in his words, the first decentralized, truly digital property in the history of the human race.
Okay, break that down. Digital property.
So digital property just means it exists entirely online in cyberspace. It's not like a house you can touch or gold bars or even a paper stock certificate.
That's a physical thing?
Exactly. It's owned digitally,
Yeah.
secured and moved around through this massive global computer network. And the decentralized part is absolutely key.
Yeah, that seems important.
It means no single company, no government, nobody controls it. It's spread out across literally millions of computers worldwide. That makes it incredibly resistant to being shut down or censored or confiscated. There's no single throat to choke, so to speak.
Okay, digital, not physical, nobody in charge.
Yeah.
Conceptually, that clicks, especially the decentralized part. But how does that make it apex property or this Cyber Manhattan? Where's the connection?
It comes down to two things: scarcity and immutability. The Cyber Manhattan analogy really drives this home. Think about Manhattan Island.
Okay, valuable land.
Super valuable. And why?
Yeah.
Partly because there's only so much of it, right? The land area is fixed. You can't just magically create more city blocks in the middle of Manhattan.
Right, it's finite.
Precisely. Bitcoin, in the same way, has an absolutely fixed supply. 21 million coins. Ever. That's it. And this isn't just a policy someone decided on, like a central bank setting interest rates. It's baked into the code, the mathematics. It cannot be changed.
So nobody can just print more Bitcoin like they print dollars.
Exactly. Nobody can make more city blocks in Cyber Manhattan. And that's a huge contrast to traditional currencies, fiat money, where central banks can and do change what Saylor calls the space-time constants of money.
Space-time constants. That sounds intense.
It's a metaphor, yeah. But think about it like changing gravity. With money, it means they can just expand the supply whenever they want, print more money.
Which leads to inflation.
Right. Your savings lose value. Bitcoin, with its hard cap of 21 million, is designed to be immune to that kind of manipulation, that kind of monetary dilution. It's a fixed piece of digital territory in cyberspace. That fixed auditable supply is why he sees it as superior property, designed to hold value over long periods.
That fixed supply really hits home the scarcity point, a fundamental driver of value. So how else does Saylor distinguish Bitcoin? Is it money? Is it like a stock? or something else entirely?
Yeah, that's a crucial distinction he makes very forcefully.
Yeah.
In his view, Bitcoin is absolutely property. It's not a currency you use for daily coffee, and it's definitely not a security like a stock, though regulators are still figuring out the boxes.
But why is that distinction so important, property versus currency?
It's about attracting serious capital. For centuries, big money institutions, wealthy investors, they allocate to property. Land, gold, art, stocks, bonds, things you hold for the long term to preserve wealth.
Okay.
Currencies. They're mostly seen as just for spending, and they tend to lose value over time due to that inflation we mentioned. So by framing Bitcoin firmly as digital property, Saylor argues it becomes understandable, investable for pension funds, endowments, company treasuries.
So institutions that maybe couldn't justify holding a currency long term can justify holding this new type of digital property.
Exactly. It shifts the whole conversation. It's not just some volatile thing for day traders anymore. It becomes a strategic asset like digital gold or digital real estate for preserving and growing wealth over decades. He thinks this reframing is absolutely essential for Bitcoin to be adopted by the mainstream financial system.
Michael Saylor really doesn't pull any punches, does he? I mean, saying, there is no property invented in the history of mankind that is better than Bitcoin. That's an extraordinary thing to say, especially when you think about gold, real estate, assets that have held value for centuries.
He definitely makes bold claims.
So what's the argument? What specifically does he believe makes Bitcoin so superior to absolutely everything else?
He lays out several points quite directly. First, he sees Bitcoin as a direct, almost existential threat to gold.
Really? Threatens gold?
Yeah, he says explicitly it will eat gold, and that gold will basically go back to just being pretty metal for jewelry, its ornamental value.
Wow. How does he back that up?
Performance data. He points to Bitcoin's historical track record over a decade, averaging something like 200% compound annual growth.
200% year.
On average, yeah, over that period. Compare that, he says, to gold's average appreciation. Maybe 2% year over the same time.
Okay, 200% versus 2%. That's a big difference.
He calls it a big insight. I mean, 100x difference in average annual return for 10 years is definitely something to look at. So he paints Bitcoin as gold in cyberspace, but, and this is key, with none of the liabilities and defects of gold.
What kind of liabilities? Gold seems pretty solid.
Well, think about physical gold. You have to store it securely, which costs money. You have to transport it, which is risky and expensive. You have to verify its purity. Bitcoin doesn't have those problems. It's digital, so storage is different. Transfer is near instant anywhere in the world. And its authenticity is guaranteed by the network's cryptography. It's like gold, but perfected for the digital age. Immutable, portable, verifiable by anyone.
Okay, the comparison with gold is stark. But most people aren't just sitting on gold bars. They're invested in stocks, bonds, the market. How does Saylor position Bitcoin against those, against the engines of modern wealth creation?
He argues it's superior there, too, especially as a place for companies and individuals to park their treasury or savings. He gives examples from, I think, a specific 12-month window he was looking at. Said something like, Google stock was up maybe 80%, which is great. But Amazon in that same period was apparently a disaster. Bitcoin, though. He cited its performance then as 110, 120% appreciation.
So significantly better than even a good stock market return in that window.
Roughly 10 times better than the S&P 500 during that specific time, yeah. And the implication he draws is crucial. In a world where governments are constantly creating more money.
Monetary expansion, inflation.
Right. Every dollar you don't have in Bitcoin is potentially dilutive to your opportunity. His argument is that if the money supply keeps growing, even good traditional assets struggle to keep up with the devaluation of the currency itself.
So the value of the dollar is shrinking, making nominal gains less meaningful.
Exactly. But Bitcoin, with its absolutely fixed supply, is positioned to actually benefit disproportionately from that monetary expansion. Its scarcity means each Bitcoin potentially represents a larger slice of the total economic pie as more dollars chase fewer Bitcoins. So it's not just about performance, it's a hedge against that currency debasement, a unique opportunity amplifier in his view.
So outperforming assets and protecting against inflation, that connects to another big idea he talks about a lot, the dematerialization of wealth. Can you unpack that? How does Bitcoin fit into that concept?
Yeah, this is really core to his thinking about how wealth is made now in the 21st century. The principle is dematerialize something from the physical world to the digital world, and you make it smarter, faster, and stronger.
Okay, examples.
Think about what we've already seen. Music used to be physical records, CDs. Now it's digital streams, instantly accessible
Like
anywhere.
Spotify, Apple Music?
Books went from paper to ebooks on your Kindle or phone. Photos went from prints and albums to digital files in the cloud.
Hmm.
Each time something dematerialized, it didn't just become more convenient. It created massive new industries and like trillion-dollar companies. Netflix dematerialized Blockbuster, Amazon dematerialized bookstores, Google dematerialized encyclopedias and libraries, in a way.
Okay, I see the pattern.
Saylor presents Bitcoin as the ultimate example of this trend, but applied directly to money itself, to property. It takes the very concept of value and shifts it entirely into the digital realm. And by doing so, he argues, it becomes inherently smarter, faster, and stronger than physical assets or even centrally controlled digital money. Moving something as fundamental as property from atoms to bits, that's why he sees it as so revolutionary. It's like putting wealth itself onto the internet.
And what's the engine behind that, the technical foundation for this dematerialized property?
Mm.
He mentions the shared immutable ledger. For someone maybe not deep into crypto tech, what is that? How does it work, and why is it so important for Bitcoin's value?
Right, the shared immutable ledger. That's the Bitcoin blockchain, basically. It's the absolute bedrock. Think of it like a giant global public accounting book.
Okay, like a spreadsheet everyone can see.
Sort of, but much more sophisticated. Every single Bitcoin transaction, right back to the very first one in 2009, is recorded in this ledger. Shared means millions of computers running the Bitcoin software all over the world have an identical copy of this entire history.
Millions. Wow.
Yeah, so there's no central point of control or failure, no single database to hack or manipulate. And immutable, that's the magic word here.
Immutable means can't be changed.
Exactly. Once a transaction is verified by the network through that process called mining and added to the ledger in a block, it's cryptographically sealed, locked in, forever. It's like carving it into digital stone and then having millions of witnesses confirm it's there and hasn't been altered.
So virtually impossible to tamper with.
Practically impossible. He claims a decentralized, mature network like Bitcoin's is the closest thing we can get to an immutable shared ledger in the history of the world. And that absolute integrity, that transparency, is where the trust comes from. You don't need to trust a bank or a government. You trust the math, the code, the network. That digital integrity is the foundation that lets Bitcoin function as robust digital property.
Okay, so if Bitcoin is this immutable digital property built on this incredible ledger, what does that imply for its bigger impact? Saylor calls it a paradigm shift, comparing it to fire or electricity. It's a huge comparison. Help us grasp the scale he's suggesting with that metaphor.
It is huge, and deliberately so. The fire or electricity metaphor isn't just about Bitcoin being useful. It's about it being absolutely foundational and transformative.
Like changing everything.
Yeah. He puts Bitcoin in the same category as inventions like compressed air, electricity, or even hygienic running water. These weren't just incremental improvements. They were technologies that completely reshaped society, industry, everything.
Right? Electricity changed, manufacturing, home life,
Yeah,
communication.
totally. And think about businesses back then. The ones that adopted electricity early, they thrived, became way more efficient, could do things previously impossible. The ones that stuck with steam power or gaslight, they eventually just faded away.
Oh, behind.
Right. Saylor suggests a similar dynamic is playing out or will play out with Bitcoin. Individuals, companies, maybe even countries that embrace it will gain a massive advantage. Those that ignore it or fight it risk becoming obsolete in this new digital economic paradigm. It's presented not just as an investment, but as a fundamental shift in how economic energy itself is stored and transferred, a new protocol for value.
That's a powerful way to frame it. If it's like electricity, how does Bitcoin as digital property compare to the impact we've already seen from digital information? Because as you mentioned, digital info already created giants like Google and Facebook.
That's a really interesting connection he makes. We saw how digital information like streaming music on YouTube or digital books on iBooks completely upended those industries. And crucially, those shifts created those trillion-dollar tech companies.
Yeah.
Facebook, Google, Amazon, Apple, they built empires by moving information digitally, instantly, globally.
Okay.
Saylor argues that Bitcoin, by moving digital property, the value itself, onto the network, is potentially 100 times more important than those information shifts.
100 times. Why?
Because it's about preserving and transferring fundamental economic energy. He suggests Bitcoin has the potential to empower literally 8 billion people with access to secure digital wealth. It's a way to bypass broken local currencies, inflation, financial censorship. It's about democratizing property rights on a global scale, moving wealth from something physical and geographically stuck to something cybernetic, global, instantly transferable.
Full empowerment on that scale.
Yeah.
Wow. But how does this somewhat abstract digital property actually connect to, real life? Our phones are central now. How does Bitcoin fit into the mobile world?
Yeah, bridging that gap is crucial. The discussion points out how our mobile apps are basically becoming mobile banks, right? We manage so much of our financial lives on our phones.
True. Banking apps, payment apps.
Exactly. And Bitcoin, because it's fundamentally just digital data, a file type, as Saylor puts it, can be integrated into these apps relatively easily, just like sending a photo or a text message.
Are there examples of this working already?
Definitely. He mentions Twitter allowing tipping using the Lightning Network. Lightning is like a second layer on Bitcoin, designed for super fast, almost free, tiny payments.
So like tipping a creator a few cents instantly.
Precisely. Something that's really hard or expensive with traditional banking rails, it makes micropayments viable globally. And then there's the huge example of El Salvador's Chivo wallet.
Yes, the country that adopted Bitcoin.
Right. Their government-backed wallet apparently onboarded something like 3 million people, many previously unbanked, in just a few weeks. And a key feature was enabling instant fee-free remittances, people sending money home from abroad.
That's a big deal. Remittance fees can be really high.
Hugely high. Salvadorans were paying hundreds of millions a year in fees collectively. Bitcoin, especially with Lightning, potentially bypasses those intermediaries. The point Saylor stresses is that integrating Bitcoin makes the product better. It adds efficiency, speed, lower costs, financial inclusion in ways traditional systems often can't match. It's about building new financial capabilities.
This whole perspective shows such incredible, unwavering conviction. Saylor talks about having laser-like focus and just sticking to a strategy of acquire and hold Bitcoin. For anyone listening who's intrigued but maybe wary of Bitcoin's famous price swings, what's the thinking behind that really long-term view? It sounds intense.
It is intense, and the core idea is the hold imperative, or HODL as the meme goes in the community.
Right, HODL.
He genuinely advises holding Bitcoin for 4 years, 10 years, or maybe even forever. And the rationale is psychological as much as financial. By adopting that extremely long time frame, he argues you won't have the anxiety that comes with watching the daily or weekly price charts.
Ignore the noise.
Basically, yeah. If you truly believe you're holding a revolutionary asset designed to accrue value over decades or centuries, then short-term volatility, which is expected with any disruptive tech, becomes almost irrelevant. It's just noise on the way to a much bigger destination. It requires patience, obviously, and deep conviction in the technology's fundamentals, trusting it will preserve and grow wealth over generations.
So if you're holding forever, does that mean you never sell? What's the philosophy on actually realizing gains or using the asset?
That's a key point where he diverges sharply from traditional financial advice, which often talks about rebalancing or taking profits. Saylor argues that kind of thinking often leads people to make awful, dilutive decisions, destroying their wealth by selling fundamentally sound assets too soon.
Okay, so when should you sell, according to him?
His criteria are incredibly strict. You only sell an asset if, 1, you know for sure it's going to be impaired, meaning it's fundamentally broken, obsolete, or being replaced by something better. Or 2, if you can't finance it to buy the next asset, meaning you need the capital and have found something demonstrably superior to move into.
And for Bitcoin?
For Bitcoin, his argument is twofold. First, it's not going to be impaired because it's decentralized, open source property in cyberspace. It just gets stronger and more immutable over time, he believes. And second, perhaps more controversially, he asserts there's nothing better to buy. Nothing. If Bitcoin truly is the apex digital property, then swapping it for anything else, dollars, stocks, even real estate, is, in his view, a step down, a dilution of your potential wealth. The longer it exists, the more it spreads, the more decentralized it becomes, the stronger its position as the ultimate long-term store of value gets cemented.
That's a very absolute view. But what if you need money? What if you want to buy a house or a car or just live? If selling is discouraged, is there another way to use the value locked in your Bitcoin?
Yes, and this is a critical part of the strategy. Instead of selling, he argues a much smarter move is to pledge it as collateral for a loan.
Borrow against it.
Exactly. This lets you tap into its value, get cash, without actually selling your underlying Bitcoin, so you don't miss out on its potential future appreciation. He gives a pretty vivid example.
Just here.
Imagine you have, say, $1 million worth of Bitcoin. You could go to a lender and borrow maybe $100,000 against it, paying a relatively low interest rate, maybe 5% a year.
Okay.
You take that $100 K and buy something fun but depreciating, like, I don't know, a Lamborghini. The car loses value the moment you drive it off the lot.
Mm-hmm.
But meanwhile, your $1 million in Bitcoin sitting there as collateral is hopefully appreciating significantly over the next few years, doubling, tripling, whatever.
So the Bitcoin growth potentially outpaces the loan interest and the car's depreciation by a huge margin.
That's the idea. He suggests maybe in 8 years, your Bitcoin could be worth, hypothetically, billions, while the loan is easily paid off from a tiny fraction of the gains, and you effectively got the Lamborghini for free. It's about using leverage smartly, letting your core asset keep compounding while accessing liquidity for other things. Maintain that staying power with your Bitcoin.
But that's a clear example for an individual. How does this logic scale up? Does this apply to big companies or even countries managing their reserves? He uses another analogy there, right?
He does, yeah. A really striking one to show how a company can transform its financial health, especially when dealing with constant inflation eroding its cash holdings.
Okay.
He asks you to picture a company holding lots of cash. That cash is losing purchasing power every year. He compares that company to a bunch of people in one of those galleys where everybody's rowing as hard as they can, dragging a 500-ton weight behind you.
Okay, exhausting work, fighting against a drag.
Right. It represents being asset poor, constantly battling the headwind of monetary expansion, watching your reserves shrink in real terms. The strategy he advocates is for the company to convert its excess cash, its treasury, into Bitcoin.
And what does that transform the company into?
Into a clipper ship where nobody's rolling, with the wind now, and we've got the sails up.
Effortless movement, harnessing the prevailing force instead of fighting it. That's a potent image. What's the practical financial result of becoming this clipper ship?
The result, as he describes it, is potentially game-changing for the corporate balance sheet. Let's say a company puts $5 billion onto its balance sheet in Bitcoin. If the broader money supply, like the US dollar M2, expands by, say, 20% in a year.
Which it has done at times.
Right. That company, just by holding Bitcoin, could see a $1 billion gain on its investment relative to the dollar that year, purely from Bitcoin appreciating against the expanding money supply. If the money supply expands 10%, that's still a $500 million gain.
So inflation goes from being a threat to being almost an advantage.
Exactly. Instead of fearing monetary expansion, the company is now positioned to benefit from it. Bitcoin acts as this strategic reserve asset that passively generates value by soaking up that expanding monetary energy. It flips the dynamic entirely. They're no longer rowing against the current, they're sailing with the wind, converting cash, which was a melting ice cube, into an appreciating asset. He argues this is key to actually creating and protecting shareholder value in today's monetary environment.
This vision definitely goes way beyond just individual investors or companies. Saylor talks about Bitcoin impacting governments, big banks, shifting global economic power. What does he see happening on that macro stage? What's the trajectory for wider adoption?
Yeah, the scope gets really big here. He projects Bitcoin's total value, its market cap, growing astronomically from around $1 trillion, where it's often hovered, potentially to 10 trillion, maybe 100 trillion, even $200 trillion.
200 trillion. That sounds enormous.
It is, but he puts it in context. He estimates the total value of all the world's assets, stocks, bonds, real estate, everything might be around $400 trillion. And he believes maybe half of that, so 200 trillion, is essentially capital looking for a safe place to park, a reliable store of value that can weather inflation and uncertainty.
And he sees Bitcoin as the prime candidate to capture a large chunk of that 200 trillion.
That's the thesis, that a significant portion of global wealth-seeking preservation will eventually find its way into Bitcoin as the premier digital store of value for this century.
Are we seeing hints of that institutional move already?
He argues yes. He points to big established players like Goldman Sachs, Morgan Stanley getting involved, offering Gitcoin services or exploring them, plus the growth of sophisticated financial markets around Bitcoin like derivatives and futures.
Which suggests serious institutional interest in trading.
Right. It signals increasing acceptance and integration into the traditional financial world. He believes the Bitcoin network itself, its technology, is already robust enough, secure enough to handle that kind of scale, already good enough to hold $100 trillion worth of monetary energy, is how he put it, suggesting the pipes are ready for that inflow.
What about all the noise around Bitcoin? The constant media cycle, the debates, the criticism. How does that factor into its growth, in his view?
It's actually a fascinating point he makes. He basically says, good news is good news and bad news is good news.
How does that work? Bad news is good news.
His logic is that any discussion, positive or negative, keeps Bitcoin in the public eye, injects it into the global conversation. When politicians, central bankers, CEOs talk about Bitcoin, even if it's to criticize it or express worry, it generates massive free publicity.
Keeps it relevant.
Exactly. He says it's sucking the oxygen out of the room. Everyone feels compelled to have an opinion on it, to discuss it in a way they don't discuss, say, Apple stock or the price of lumber. This constant chatter, regardless of the sentiment, educates people, makes them curious, and ultimately draws more participants into the ecosystem over time.
That's a counterintuitive take on publicity. Now, what about governments? They tend to move slowly, be cautious, sometimes hostile to things that challenge their control, especially over money. How does he see that playing out?
He's quite candid about that. He acknowledges that governments, established bureaucracies, are usually the last to embrace something this disruptive.
Understandably, perhaps.
And there's a recognition that some might see Bitcoin as, well, too perfect, too hard to control, too resistant to surveillance or seizure. He cites Ray Dalio as someone expressing concern that because it works so well in being decentralized, someone powerful will inevitably try to ban it.
So potential for conflict there.
Yes. Our role here is just to report that observation from the source. The very features that make Bitcoin attractive to its proponents' decentralization, immutability, can be seen as threatening by established powers. So, regulatory hurdles, attempts at bans, that's expected. But despite that, Saylor remains adamant that Bitcoin transcends any company, any CEO, any country. He sees it as an unstoppable technological force spreading everywhere, regardless of attempts to contain it.
And thinking globally, what are the implications for different parts of the world? Does he see it shifting economic power?
He does. He predicts the center of gravity for the Bitcoin network will shift to the West, maybe due to clearer regulations or energy advantages. But he sees this shift as ultimately beneficial globally, a windfall for the rest of the world.
How so?
Specifically, he mentions it being good for Africa, good for South America, great for North America.
Yeah.
The idea is that Bitcoin provides people in regions often plagued by high inflation or unstable currencies a way to protect their savings in a globally recognized scarce asset. It counteracts that wealth erosion.
A tool for financial self-defense, almost.
Kind of. And it also creates new economic opportunities, especially for progressive miners and regions with cheap energy. He uses Texas as an example, actively encouraging Bitcoin mining because it can be the highest value use of intermittent or stranded energy.
Okay, connecting mining to energy markets. That often comes up as a criticism of Bitcoin's energy use. How does he address that? Does he really argue it's good for energy grids?
Yes, he tackles that head on. He pushes back against the simple idea that Bitcoin's energy use just scales up endlessly with price. He makes a key point. Over the last decade, mining has shifted from being primarily energy intensive to being technology intensive.
Meaning the hardware gets much more efficient.
Exactly. Like computers in general, they get vastly more powerful over time without necessarily using proportionally more electricity. Competition drives miners to use the latest, most efficient chips. So, efficiency gains temper the overall energy growth.
Okay, but it still uses a lot of energy, right?
It does, but he reframes how it uses energy. Because miners need the absolute cheapest power possible, and because mining can be turned on or off quickly, they become a unique kind of customer for energy grids. They act as a buyer of last resort.
What does that mean?
It means they can soak up excess energy that might otherwise be wasted. Think of remote hydro dams producing power at night when demand is low, or natural gas being flared off at oil wells because there's no pipeline. Bitcoin miners can set up shop right there and turn that otherwise wasted energy into economic value.
So it incentivizes using stranded or renewable energy.
That's the argument. By creating a global location-agnostic buyer for cheap energy, mining can actually help subsidize renewable projects and stabilize grids by consuming excess power. It turns an energy problem into an economic solution, potentially.
That's definitely a different perspective on the energy debate. So wrapping this all up, beyond the economics and technology, what's the kind of underlying feeling or message Saylor attaches to Bitcoin?
The word he often comes back to is hope. Yeah. He presents Bitcoin as hope to fix your business, hope to fix your family balance sheet, hope to fix your country. It taps into that deep-seated desire for financial security, for a way to protect your work, your savings, from being eroded by forces outside your control, like inflation or currency devaluation.
For people facing those struggles daily, that must resonate.
Exactly. For billions around the world dealing with unstable economies, Bitcoin represents a potential escape hatch, a way to opt into a global, sound digital asset that can't be arbitrarily inflated or confiscated. It's about storing your economic energy securely for the long haul, a path towards financial stability, maybe even freedom, by shifting wealth onto the stronger digital foundation that belongs directly to you.
Wow. We have certainly covered a huge amount today, really exploring this unique and very passionate view of Bitcoin as the apex digital property, this paradigm shift like fire or electricity, and this compelling, if intense, long-term strategy. Quite the deep dive.
Absolutely. And if there's one core takeaway, it really is that framing. Bitcoin as the first decentralized, truly digital property in the history of the human race, emphasizing how fundamentally different it is, designed as this superior store of value for our increasingly digital world. It's not just another coin, it's presented as a foundational shift in ownership itself.
Mm-mm.
So maybe here's a final thought to leave you with, something provocative from the source. If Bitcoin really is like an encrypted block of sunlight that you can move at the speed of light and you can literally take delivery of $1 billion of it in the palm of your hand or hold it in your head, what does that truly imply for the future of wealth, of ownership, for every single person on this planet?
That is definitely something to think about. Well, if you found this deep dive as fascinating as we did, please do follow, like, and share it wherever you get your podcasts. It really helps others find the show.
Yeah, definitely appreciate the support.
And for more insights and discussions like this, make sure to follow What Bitcoin Taught Me on Twitter X, Nostr, Bluesky, Threads, Instagram, Facebook, and LinkedIn. We're pretty much everywhere. Thanks so much for joining us for this deep dive.